With 1,800 ETFs, or exchange-traded funds, around the world, the universe is getting quite complex. Today we have back Oliver McMahon of iShares Canada, a division of BlackRock, to explain the new environment in ETFs. Welcome back, Oliver.
Thank you, John.
So initially, you guys are the biggest ETF maker. You're known for broad-based, reasonably priced ETFs. Your competitors, on the other hand, are starting to introduce all sorts of leverage to reverse ETFs and derivative-based ones, even actively managed. First of all, are you planning actively managed at all? I mean, I know you have a sort of asset allocation fund.
Yeah, for now, our core portfolio of products remains index products. That's certainly the case in Canada, and that remains to be the case in the most of the rest of the world as well.
Tell us about the balanced ones, because it's essentially a one-stop shopping sort of
Yeah,
approach.
so we have 4 products in Canada. They're called the Portfolio Builders products. And these essentially are a reasonably diverse portfolio of products that an investor can buy. And just by buying one product, they get exposure to many underlying products.
This doesn't mean, though, you're going to get into leveraged or reverse, or basically ones that let you make a negative bet.
That's absolutely correct, yeah. We don't currently offer leveraged or reverse products, and as far as I'm aware, we have no plans to do so.
Mind you, even if you have only long-only ETFs, you can still short them. That's one of the whole selling points.
Yeah, it's a big advantage of ETFs. You can go into the stock market and short them, yes. But again, our builders products don't take short positions either.
And the other thing is, I mean, you make a distinction between the market, whereas the retail investor, where you quite rightly counsel that they know what they own, or at least the advisor knows, and what you provide to the corporate, the pensions, the insurance companies. Give us an example of some of the products that maybe the institutional investors are demanding that you're supplying them.
Yeah, I mean, you're absolutely right. It's incredibly important to understand what you own, understand who's providing the product, understand what's being held in the product, and just do your research. Just because a product's an ETF, it doesn't mean that you don't need to do your research and your background reading. We're getting demand from the institutional clients, certainly for fixed income product, and certainly for trading products. Some of the hedge funds like some of our products because the volume and liquidity of our products is incredibly high. They're some of the most traded stocks on the Toronto market and elsewhere on the globe too.
Now, advisors, we have competitors, I think, that actually provide trailer fees, compensation for ETFs or mutual fund and ETF hybrids. Philosophically, you do not believe in trailer fees at
That's right. I mean, our approach has always been that the discussion about advisor compensation is best done between the investor and his advisor. You know, we really don't add any value by getting involved in the middle of that.
So, in fact, I would think that among the advisor community, the fee-based people are quite happy to sell yours because they can tack on their own fee on top of it. Perhaps the commission or transaction-based people are less inclined to sell them.
Yeah, that's exactly what we're seeing, and that is what you'd expect. And as we see the number of fee-based advisors increasing over time, I think that does give us more opportunities.
The irony, of course, is that as the ETF universe becomes so complex, with such a proliferation of products, you pretty well do need a financial advisor to help you sort them all out.
Yeah, we would generally advise people to have a financial advisor. You know, there's a lot of products out there, as you say. There's mutual funds, there's exchange-traded funds. There's lots of different things. If you're not a specialist, and if you don't have the time to read up on products and do your research, try and get the services of an advisor.
Mind you, there's a lot of do-it-yourselfers that will go to a discount brokerage and basically just buy a single click your products. I mean, that's got to be a big part of your market as well.
Yeah, absolutely it is. I mean, if people have the time and the research, the passion to look for their own products, then absolutely I would encourage that. I mean, any education is good in finance.
Finally, any big new product concepts about to come down? We've talked about a bit about active management or maybe frontier markets.
Yeah, we've seen lots of demand in 2 areas over the last couple of years. We've seen people scared by the volatility of the marketplace and trying to increase their exposure to fixed income. But we've also seen people trying to embrace the perceived recovery as we exit a recession and try and increase their exposure to emerging markets. So I think those could be our themes for the future.
Thank you very much, Oliver McMahon, a director with BlackRock, iShares Canada unit.
Thank you.